Well, hello and welcome and welcome and hello. Happy Monday, you inglorious bastards. It is me, Danny Deals, and my alter ego, DJ Patchy Drizzle, bringing you un poco mas. Guys, things have gotten desperate. I need more shares. I need more leaps. I have taken back to my college role of DJing parties. Now, DJ Patchy Drizzle, he comes in with a high degree of ambiguity and leaves with a whimper. Sometimes you want to have a party started. You want to have a party, but you don't really want to get it started. You might be willing to throw your hands in the air, but you don't want to do it like you just don't care. That type of reckless abandon is the type of thing that leads to a claim against your homeowner's insurance policy. What if there's a ceiling fan up there? What if there's some other hazard up there? You're going to end up with a claim. Your rates go up. Don't throw your hands up like you don't care. Throw your hands up with a due degree of caution if you want a nice, tame party, good, clean, family fun. Hire DJ Patchy Drizzle. You can't go wrong. Anyway, guys, I don't know where I'm going with that ridiculous introduction. It is un poco mas, and I have limited time, so I should not waste it. Guys, another just absolutely thrilling day with the Sofi stock down 9 cents on really weak volume, up 1 penny after hours, so it's really ripping after hours. Back to $7.20, and it's that kind of weak sauce paper hand attitude that's going to have you losing money in these markets. I'm hearing so many people saying, SoFi's a great company. They're doing so well. They're executing, but it's just a terrible stock. Great company, terrible stock. I don't know why. Never wanted him. Couldn't have him. Who is this Mugatu? Analyze. It doesn't make any sense. Great company, horrible stock. The stock's being shorted. It's being held down. And besides that, if you ridiculous turds haven't, let me share my screen so I can just, bring some receipts, as the kids say on TikTok. What the hell's going on here? Okay, so I'm going to share my stupid screen. So you can see it, guys. Only 20 million shares traded on the day. This is a really good actual video by Parkev Tadovasian. Sounds like might be some kind of a Russian armo. I'm not really sure. But anyway, this guy's quite smart. But he's very plain spoken, very easy to understand. In this video, I'm not going to show you the whole thing or go through it because it's pretty long, and he kind of moves a little bit slowly, over the presentation of the information, but he's basically breaking down how they're adjusting their loan originations. Student loans were up like 40%. Mortgage originations were up like 200 and some percent, and then personal loan originations are obviously pulling back, getting much more selective. So he's talking about how that's a really good thing for the SoFi investor. This guy is very cautious in terms of price targets, in terms of how he talks about stocks, how he breaks things down. But I would actually recommend that article. Want to talk to you just again briefly. Here's what I keep hearing, guys. I'm losing patience. I don't blame you. I mean, this thing fell from 25, and it did not stop falling till it hit $5 or under $5. And then from there, it consolidated for an entire year, bouncing off the fours. Okay, broke out last June, beginning of June, and frankly has been consolidating along $7. This last period for almost 3 months now, this really tight consolidation into this wedge. That's probably the most actual real solid consolidation we've seen in the history of this stock. Maybe this area here, which is like 525 to 475. This was a similar time period. But realistically, the stock hasn't dropped back down below 7 in the last year, and has in fact tested 7 over and over and over again and held up. You see it fighting through the 50-day moving average, and I like to think it's going to break through this wedge. But again, you have a year of consolidation here, levels up. And if you look at, the $4.50 level, it's moved up off there where it consolidated for a year to almost a year of consolidation at, a base of $7. And you look at a 450 move to 7, that's an over 60% move in terms of leveling up. Now, if you look at a stock like Palantir, which has just moved up dramatically, or you look at DraftKings or some of these other stocks that are much higher, I keep hearing people say, man, I just missed the bull market. Like, Why don't I sell SoFi? Why didn't I just get out of SoFi, get into Palantir when it doubled, then get out of Palantir, get back into SoFi at the lows? I'd have had 10 times as many shares. I'd be a multi-millionaire by now. God, I'm an idiot. And it's like, okay, number one, yes, you are an idiot, but not for the reasons you're stating. There's a myriad of other reasons of horrible decisions, you've made in your life, why your finances aren't where you want them to be. But holding SoFi stock through this 2-year period of consolidation is not one of them. If you look at how stocks move, not just SoFi, but other stocks, I showed you how Microsoft sat there at the very same level for 10 years. I showed you how Amazon sat there at the very same level for 10 years and just consolidated before making big moves up. Now, stocks these days, they're not going to sit for that long. But this whole sector's been like this. It's been following the fintech ETFs, been following other fintechs, but you have a much better company here. And I kind of flip the thinking on its head. I'm like, if I see a stock that I believe is undervalued and has been held down by shorts, market makers, now they're accumulating the stock, now they have incentive to push it up, why would I want to dump now at 7 when 7's been holding for a year? Don't dump at the base. It's establishing a base. It has established a base, and you think this thing has to break upward. That's what I think. Now, can the whole market fall apart? Can we see World War III? Can all kinds of things happen? It looks like inflation's cooling off, and then there's just a lot of good things happening for SoFi. I see student loans going, those originations going up, much lower risk. Home loans going up, much lower risk. You sell those off. Personal loans are something you step on the gas when you want to. You control that. So SoFi is de-risking, and that's what I wanted to talk about today. Another good article. But go over to my whiteboard. You can see here it says turds, and then where the S would be, I've used a dollar sign to sort of indicate the financial theme, the stock theme. Over here, I've drawn the SoFi with my mouse, the SoFi logo. But I just want to say, SoFi is building its house out of bricks. SoFi makes decision after decision to remove risk and be a long-term financial powerhouse. SoFi was in the crypto game, right? But SoFi wanted a bank charter. SoFi made the decision for the long term. Okay, a lot of people are like, well, they have cash. Why aren't they maximizing personal loans? Because personal loans in this environment are risky. So they're pulling back and they're pushing through on financial services. They're pushing technology. They're selling that. Let's see. Hold on one sec. Sorry about that, guys. Got some bills to pay, people to see. Very important man. No, not really, but just people need certain answers. But anyway, guys, so there's all kinds of reasons that SoFi continues to make decisions for the long term rather than the short term. Not the least of which is that Anthony Noto does not, he does not benefit by pumping the stock in 2024 and 2025. And that's what I'm talking about when I say, look at the EPS, projections that SoFi has given us for 2026 and think about it. There is one thing and one thing only the markets can't ignore, shorts can't ignore, nobody can ignore. And that is real earnings, cold, hard cash. Cross my palm with silver. The market is not going to ignore cash flow. Okay, and Anthony Noto sits there calmly. He can't say anything. He wants to get into business banking. While Robinhood's releasing a gold-plated, novelty credit card, Anthony Noto's hiring former 30-year Fed officials and trying to grind his way into business banking. Anthony Noto and SoFi, they're giving us access into private equity investments that no other retail investors are going to have access to. They're giving us access to these, shitty IPOs that most of the time you probably shouldn't invest in anyway, but you're getting access to it. That's what you want. You want access. Low Country Loot and Pawn is here, guys. Welcome and hello and welcome. And just a couple other things. Steve went into this. Basically, there's two real metrics I want you to watch: direct deposits and tech contracts. Those show the durability of the business. Those will lead to higher profits, higher revenues, not just for years, but for decades to come. Direct deposit, the bank deposits drive the lending business, lower the cost of that business, bring everything in-house, okay? And then the tech contracts, they take so long to write, they take so long to implement, but they last. They're going to last for decades. It's not like a financial institution is going to switch everything over to Galileo and then switch it again in a couple of years. I mean, unless Galileo just crashes and burns and is horrible, but that's not going to happen because then they wouldn't be going through these lengthy proof of concepts. So another one, vertical integration versus outsourcing. If SoFi wanted to just run and pump the stock in 2024 and 2025, they would be maximizing personal loans, maximizing revenue now, and they would have outsourced a lot of these functions. They would have outsourced, covered calls and a full option suite. They would have outsourced all kinds of things, but they didn't want to do that. They took a couple years to bring the entire SoFi under the umbrella of Galileo, Technesis. Now they're pushing that out to the broader market. And I think as they close some of these contracts, then you're going to see them turn more attention to in-house development. But all these things, guys, they delayed the growth of the company. They didn't let us flash earnings. They didn't let us grow these sort of wild up and down quarters where we're making a ton one quarter, then losing a ton the next quarter. It's just steady, stable growth. It's tortoise and the hare, but we're a tortoise who's also pretty fast. They're giving us growth and earnings. They're giving us guns and butter. They're giving us guns and butter, and we love guns and butter. Who doesn't love a nice dinner roll? Go out, pop off a few rounds. Buzz blocking everyone. What the hell's going on in the comments? I haven't bothered to look at you idiots. So that's basically what I'm talking about. We've got ultra conservative management and then a fintech with real products, guys. That's something, that another thing I just want to stress. Real products in a proven sector. There's two kinds of new. There's blazing a trail doing something totally new like Amazon did or like Palantir's doing or some of these businesses that are really one-offs, Teladoc. Blazing a trail is difficult. You need snowshoes. You need a machete. You need an Eskimo with a machete who knows his way around the rainforest. It's a unicorn. It's impossible to find. Okay? I don't really know where I was going with that. But SoFi, lending, okay, software on the tech side. These are real products proven to make real margins. All these other fintechs, they're glorified loan brokers. And that's an insult to loan brokers. What are you putting your Walmart groceries on 5 easy payments? Fuck you. That's not a business, folks. SoFi is a real business with real management. They're building their house out of bricks. And when the big bad wolf says, little pig, let me in, this little pig's going to say, you could blow all you want. You can blow me. You can blow Anthony Noto. I don't know where I'm going with that. This is supposed to be a PG-13 program, but sometimes my mind goes a little bit astray. Nobody wants a beedra from a wolf. It would be just a little bit toothy. But anyway, guys, hello and welcome. Carl Seamark, Flint Creek Soap Company, Roland Dubs, Matt Flows here, Mustang Rider, hello and welcome. Raise the roof. Just do so cautiously, Roland Dubs. Do so cautiously. I should debate Ram. Who's Ram? Ramrod from the movie The Wrestler? I would be happy to. Carl Seamark, not only pouncing the stream like a cougar student night. Oh, he's like it's like a prom night every night. For Not a Lurker J Money. Actually, Ram sucks. Here, Russo's here. Not a Lurker's here, of course. Thank you for producing the show. Also, I'd like to thank Alberto Berti Aviles for also moderating the show. Low Country Loot and Pawn. The Pawn people here. Pawn people always got cash in case you got to sell some of your stuff. Thank goodness for pawn people. I've had to visit a pawn shop a few times in my younger years. Sometimes liquidity and cash is king. Good healthy growth, so there's no stress. Yeah, I mean my average is in the 5s. I'm not stressing, but even if it's a higher, I'm not going to stress. You can't look at your average. You just have to look at what you own, where it's going, what it's doing, what management's doing. Parking your cash in SoFi instead of a savings account over the next year. Danny D's nuts for president. I had a dream about SoFi. I hope I was not in that dream. Alberto Berti Aviles. If I was, I hope I was in my SoFi shirt. Baby Wrench, where you at? Nicholas Youngworth, welcome and hello from Vienna. Oh, a beautiful day in, what is that, Austria? Nice. California. Nicholas Youngworth out in, Vienna. Beautiful, beautiful. I've never been there, but I hope to go someday. I need un poco más dinero. We all do, Bertie. He's blocking everyone. That's not going to make you any more money. That's going to make us all less money. In fact, it's going to be equal because we don't make any money for this channel. Market will not ignore FCF, PayPal. I'm a joke to you. No, Carl, you're very, very serious. Serious as a heart attack. Nice whiteboard, Dad, Mr. Premium. Yeah, I added the whiteboard, not a lurker. Made some notes, some highlights, etc., etc. Got to pay the rent, Mr. Potato Sofi. I have been told I do look like Mr. Potato Head, but that really doesn't help me. Kind of look like Carl Malden. I've heard John Goodman. I like to think of myself as a fat Paul Newman, but anyway, you guys can be the judge of that. It's Daniel Barna. Noto will open the gates of hell in shorts while saying welcome and hello, hello, and welcome. I hope to God. I want to be Noto's anger translator. I think one of these days he's absolutely going to burn these shorts. I don't know how he's going to do it. I don't know when he's going to do it, but I know he's going to do it, and I want to be holding my shares. Crazy if I had to wait another week for someone to start Happy Victoria Day turds. Is that some kind of Canadian thing? Is that some kind of big beard thing, beard oil thing? I don't know what's going on there, Bobby Atkinson, but it sounds like maybe some type of Canadian. I didn't know fintech and fintech analysis and fintech U-turders were going to be so dominated by Canadians. I'm trying to represent America, but it's just an uphill battle against all these younger, whiter, more intelligent Canadians, all with glasses, all with these good technical jobs, these clever names. They have accounts on X. I don't even know what X is. No butter for Danny deals. Olive oil. Okay, not a lurker. You're micromanaging. I've only had 3 cups of coffee, for God's sake. I mean 2. If Princess Jill's like, I love you, sweetheart. I've only had 2 cups of coffee. Aspen, California. It's nice. Like, excuse me, miss. I'm supposed to give a lecture. Dumb and Dumber. It's just absolutely great. Big gulps. Sweet. Like, I don't know. I don't know who wrote Fairly Brother, but I don't know how they came up with that stuff. I guess a lot of drugs. Yes, fintechs. Fintechs are all inside. They're all online. They're all digital. Connor Jennings, 8K shares. Nice position, Connor. Need SoFi. Okay, guys. So open interest right now is $7. Doesn't mean it can't push up because there's just very, very low volume on the puts. Calls, of course, out at 7. Opening up more calls at 750. So, gives incentive to hold the stock down in this area, just like last week, just like the week before, just like the stock's been doing for the last 2.5 months. Having said that, the short interest, guys, they keep saying the short interest is like falling like a rock, but it's come down from 300 million shares on loan to I don't know why Ortex does this funny bit where it freezes. But anyway, guys, earlier I just looked. They borrowed 9 million shares today at the net. I'm not sure why that's doing that. But anyway, yesterday or Friday, pardon my French, 42% short volume ratio. Before that, last couple days, 60 and 50 and then back to the 30. So it's really jumping around between shorting and not shorting. You saw, I said, Jane Street, massive increase in the amount of their shares, 228% to almost 10 million shares. But again, CalPERS is heavy in the stock. They decreased their position by 4%, but still own almost 1 million shares. I really like to see CalPERS in any stock that I'm in for the long term because they tend to go in. Royal Bank of Canada selling out. They were short long. Some other institutions selling in and out of their position. But as far as, I don't know why Ortex giving me issues. But in any case, guys, trust me when I tell you that there was just pretty flat on Friday and then heavy borrowing again today. They say the short's going down, but I'll believe it when I see it. Again, I'll encourage you to read a couple of things, not just Stephen Fiorio's latest article for an understanding of what they're actually doing on the tech side, what could come on there. Also, Dan Dolev's comments. He met with Chris Lapointe and SoFi Management, his team, in depth, going really into the numbers, not one of those lazy, useless, sack of shit analysts actually doing his job. Another good article, I was just getting into this one. This is May 17 by Juxtaposed Ideas. Read tons of his articles. I don't know if it's a man or woman, actually. Who knows? Juxtaposed Ideas. But basically talking about how, same thing I was talking about today, it's resting at H2 2023, H1 2024 support levels in the 7s, pulled back. The market thesis remains robust, so the market likely needs some convincing. This is one of those stocks. The thesis is there. The execution is there. The work is there. The progress is there. Now the earnings are there. And they're going to prove that for more quarters. The growth will be there. The margins are going to continue to improve, particularly the incremental profit margins. They bring in new revenues. They're going to bring a lot of those revenues to the bottom line more and more over time. As they prove this to the market, next few quarters, S&P 500 inclusion, getting into 2025 and then especially into 2026, looking at the EPS just absolutely exploding. And I think that's how Noto's timing it to maximize his own personal profits and that of, his fellow management executives. So it's not really surprising. With interest rates still elevated, it's unsurprising the management has been able to generate excellent spreads for its members' savings balances with 4.6 APR. Deposit base swells to 21.6 billion, which is 16% Q on Q or plus 116% year on year. Deposits up 116% year on year. At the same time, thanks to SoFi's growing members. I can't talk very well on a Monday. Sorry, guys. My brain doesn't work. It really doesn't work most of the time. But at the same time, thanks to SoFi's growing members and increased cross-selling products sold lending financial service, it has reported accelerating non-interest income of 242 million Q-on-Q basis, plus 7%, plus 2.5 year on year. So it's still doing very well on lending, still with pulling back originations. Most importantly, financial services. We know all this stuff, guys. Growing revenue 42%. And then naturally diversifying its revenue stream, on track to finish 2024 revenue mix near 50-50, which is a huge change just from a couple of years ago. So after 8 consecutive quarters of growing loan delinquencies, it appears that things have started to moderate for SoFi as well, declining cumulative fair value adjustment 3.9%. So that's also really good news in terms of the, sort of stopping the bleeding, if you will, in terms of the delinquencies and the defaults. That's obviously one of the biggest primary worries about the stocks, is so much of their balance sheet is out there in those personal loans. So this also explains why SoFi has moderately raised guidance. Financial services net revenue growth at least 75% year on year. Tech platform at least 20% year on year compared to the original blend guidance plus 50%. So you'd like to see some more of that growth coming from tech, but it is what it is. 20% is still really good. They're still, kind of coming out of that transition. We have to see them land some of those big contracts and wait for that to show up on the books. This is the top of the raise. The financial guidance, higher adjusted EBITDA, 595 million, adjusted EBITDA margins, 25%, GAAP EPS, 8 cents, compared to the original guidance of 585, 24.5%, and 7 cents. So it's a modest raise, but it's a raise nonetheless. So I don't know why people panicked about Q2 guidance. I think it's just mainly FUD because there was that full year raise. So it's not a critical mix. If you're playing a sports, playing, football, if you lose the second quarter, but you win the other 3 quarters and you win the game, it's really not important that you lost the second quarter. It's important how you finish the game overall. So despite SoFi has already lost much of its 2024 gains while trading below its 5,100, 200-day moving average, I think it just popped a bit above the 50 while underperforming the wider market. Again, SoFi has also got a significant short on the stock, so that's kind of important to note. CAGR, they're looking at 16%, EBITDA 39% change, EBITDA margins looking really good. Adjusted EPS profitability, going to look at SoFi's adjusted EBITDA. I don't want to go through all this. These are just kind of numbers. They're hard to read. They're hard to follow, but I highly encourage you to read this article if you're worried about what's going to happen with SoFi bottom line. How do they bridge the gap between where they are now, making roughly 1 to 2 cents a quarter, to where they're going to be in 2026, saying they could be making as much as 21 cents a quarter. It really kind of shows you how these trends are going in that direction, and they're just turning that critical corner from profitability, and how profits are going to increase rapidly as long as they can continue growing. So combined with management's intensified efforts on lending and financial service segment, is a very updated fiscal year 2024 guidance above. We think SoFi may very well emerge as a winner in the online bank fintech market, lending strength, and its robust growth prospects. So good article, guys. Really heavy on numbers, really heavy on analysis, and just going through the growth story and where things actually are, putting the FUD out of your mind. But this is one of those days that makes people want to give up. I keep hearing this comment. Oh, the market's green. Everything's green. This stock is horrible. This stock is horrible. Guys, stocks are not, your girlfriend. Stocks are not your real doll. Stocks is just an inanimate object measuring where buyers and sellers are. And there's just, the mechanics still have a hold of the stock. The shorts still have a hold of the stock. And most importantly, the option sellers have a hold of this stock. You see, returners buying more calls at 750, like the morons that you are. And, that feeds the beast. And then if they can keep pushing the stock up and down, they're getting stop losses. They're winning the war of attrition. People who bought in to swing around earnings, they're already out. So a lot of the retail is, we're our own worst enemy, because we're saying, oh, we're long-term. Why aren't there more institutions in the stock? Why isn't Noto buying? Why is Rochelle selling? But at the same time, you're getting pushed in and out of the stock, and you're falling for a lot of these stupid short-term hype calls, and you're just losing money. That's why the market makers hold the stock where they hold it, because they can take money from retail. It's like taking candy from a baby. And you're the baby. And I guess that would make me DJ Patchy Drizzle. Sorry, Mason Kellum. I guess I'm not talking about that. What's the link again? Posted on the shared video. Send me the invite. Oprah. Okay. Oprah. I tried to get a... Oh, shit. I was supposed to get a hold of Oprah. Let me see what time I have. I'm going to have to... I don't know if Not a Lurker can send Oprah a link. Guys, I'm going to have to jump back on with Oprah. I'm sorry about that. I have a big meeting coming up in about 15 minutes, and I have to do sort of some, chubby, chunky monkey preparation for that meeting. So I'm going to have to apologize on that, Oprah. But I promise I will get you on. If not later today, then hopefully tomorrow. Sorry about that. Should have emailed you earlier, guys, but I am just so busy, absolutely swamped on Monday. A very boring off day on SoFi, but again, that's the point. They want you to get sick of it. They want you to sell at 7 so they can take the stock up. Most credible analysts are 10, 11, 12, even 13. Morningstar, I think, lowered their fair value from 13 to 12 or something, but, everybody who sort of has a good track record has very significant upside on the stock. You get a share. Somebody's writing an article, and then a bunch of celebrities are backing up just what an absolutely horrible, horrible person Oprah is. And just, I don't know if people don't know, but Oprah is not paying for those cars, folks. Anyway, guys, it's DJ Patchy Drizzle. If you're ready to get your party started in a very responsible sort of elevator music type of energy where the neighbors are definitely not going to call the police because they're not even going to know that we're in there, raising the roof oh so gently, because we have homeowners insurance, we have neighbors, and it is Friday night, but we have to be at work on Monday, so we don't want to go too hard. Don't want any hangovers. Definitely don't want people to have too much fun. I was reminded of a joke. Why don't Mormons like premarital sex? And why is that? It could lead to dancing. This is Danny Deals. Thank you for watching Un Poco Mas. Peace! I'm out.